Just one company on the docket today, but it's a meaty one. Used car retailer Nextage, ticker 3186, just dropped their semi-annual report with an upward revision and a pretty aggressive financing story.
Yeah, this one packs a lot into a single filing. Let's get into it.
So Nextage raised FY 2026 guidance, sales up to 746 billion yen, operating profit to 27.6 billion. That's a meaningful bump. What's driving it?
H1 was explosive. Sales jumped nearly 27%. Operating profit almost doubled year over year. They're clearly riding a used car market that's stabilizing. Registrations actually ticked up slightly, led by K-cars.
But margins are compressing, right? I saw gross margin drop from 17.2 to 16.1%.
Exactly. Rising procurement costs are eating into them even as volume surges. They're paying more for inventory and passing some of that through in higher sales prices, but not enough to hold the line on profitability.
And they're funding an aggressive inventory buildup with debt. A 20 billion yen syndicated loan, maturing 2031 with covenants attached.
Right. Consolidated net assets have to stay above 75% of prior year and no consecutive ordinary losses. That's not trivial. Total debt jumped from 83 billion to over 100 billion. Cash doubled too, but the leverage shift is real.
What's interesting is the strategic pivot. Last annual report, they were still digesting the ALC acquisition. Now it's organic. New stores, new formats, all 47 prefectures covered.
They hit the 47 prefecture milestone with the Tokushima opening in April. Store count went from 353 to 364. They're also testing a new format called SUV Land in Toyohashi alongside their Nextage and Universe brands, plus standalone purchase-only stores for vehicle buybacks.
On governance, they rolled out restricted stock for directors and employees and set up this e-ship trust that holds 2.3 million shares. Feels like they're trying to align incentives while taking on more balance sheet risk.
That's the read. They're also proposing a female CPA, Miki Daimon, as outside auditor and bumping auditor remuneration cap from 30 to 50 million. More oversight heft at a time when the debt profile is changing.
So the bottom line, strong top-line momentum, debt-funded expansion, margin pressure worth watching. The covenants on that syndicated loan could become binding if the used car market softens.
Watch for margin trends next quarter and whether inventory turnover keeps pace with that debt buildup.
Agreed. Thanks for listening. See you tomorrow.